What opportunities can be uncovered within the crypto space today? I'm Mike Loder. Crypto Corner starts right now. Hello everyone and welcome back to Crypto Corner, presented by the team at BTC Markets, where each episode we go about detailing those ever-changing crypto market trends. For more, I'm going to bring in Carolyn Bowler, CEO of BTC Markets, to help us out with today's topic.
Great, thank you so much and welcome to everybody joining us today for Crypto Corner. I've got a very special guest with me who is Charlie Sherry. He is the Head of Finance at BTC Markets and he's here to talk to us all about the Bitcoin halving. Charlie, thank you so much for coming in.
Yeah, no problem. Happy to be here.
Yeah, it's a very different kind of office setting for us today.
A little bit.
I wanted to talk to you about the Bitcoin halving. And I think for those of us who've been around for a while, we're quite comfortable, very familiar with what the Bitcoin halving is and what it means. But for many who are only coming into the space now, they're still trying to get their heads around a lot of the lingo. Can you explain in layman terms, what is the Bitcoin halving and what impact is it likely to have on the supply of Bitcoin in particular?
Yeah, I'll do my best. So before we talk about the halving, we probably want to go back to like the value proposition of Bitcoin and I guess why it was invented. So the whole concept around Bitcoin is that it's like this hard money. It is manipulation resistant, it's inflation resistant, and it's like uncorruptible, I guess. So Satoshi created Bitcoin to like contrast to the fiat currencies we have in the world. So Bitcoin has a fixed supply. There will only ever be 21 million Bitcoin. We're not there quite yet, and we'll talk about that a bit with regards to the halving. And I suppose that's in stark contrast to fiat currencies, which are like inflated on the whim of a central bank. So if you hold Bitcoin, you know the roadmap for the unit economics of that currency, whereas your dollars or your fiat currency can, the inflation changes as the interest rate is changed by a central bank or whatever that may be. And Bitcoin operates on a decentralized network of computers where no single entity can exert control. So it's sort of resistant to manipulation. And thanks to blockchain and public ledgers, all the transaction data is public information, and it's resistant to fraud. So that's like the sort of backdrop of Satoshi creating this like counter currency to what we have in our fiat currencies. So as I mentioned, as we get into the halving, there will only ever be 21 million Bitcoin, but we won't get there till like the year 2140. So a bit of a ways to go still. Currently there's about 19.68 million Bitcoin in circulation. So how did we get to that point where we are today? So Bitcoin is issued into the digital financial world through a process called mining. So in order to maintain consensus on the Bitcoin network to ensure that transactions and data is correct and true, blocks have to be mined and transactions have to be validated. So miners solve complex computer problems using high-powered computers, and they are rewarded for doing so with Bitcoin. And throughout the life cycle of Bitcoin, those rewards change. So currently the rewards are 6.25 Bitcoin per block mined. So each miner that mines a block, they get 6.25 Bitcoin as a reward. But before the first halving, that reward was 50 BTC per block. Then second halving went down to 25 BTC per block, then 12.5 BTC per block, and now 6.25 BTC per block. So this halving concept is just a supply event where the Bitcoin issuance gets cut in half, and it happens every 4 years or 210,000 blocks.
I like to refer to the miners as the worker bees of the Bitcoin hive, if you like, and how the bees get paid in honey for the work that they do building up the honeycomb that is, where they live. And in some sense, the miners then get paid in their honey, which is the Bitcoin.
That's the proof of work concept.
There you go. Exactly, as it goes along. With that though, I mean, one of the things, and you definitely touched on it there, with that control over supply, it has very obvious impacts on inflation. And certainly that seems to be a calling card for Bitcoin. Can you talk us through a little bit around that? Yeah,
so obviously the fixed supply is one of the sort of value props for Bitcoin that people like Bitcoin maxis push, and obviously we're not there quite yet, but with the current reward issuance of 6.25 BTC per block, the inflation rate is about 1.8%. So it's probably a good bit lower than what you see in fiat currencies. And that changes with each halving. So after this upcoming halving, that inflation rate will go down to 0.7%. So that's pretty low. And that, I guess, increases the scarcity of the asset because less Bitcoin is getting pushed out into the digital financial world with each block being mined. So like price model wise, I guess, so if demand is where it is now, and that's buying up all Bitcoin that's currently being issued at a 1.8% rate, then when that goes down to 0.7%, if demand stays the same, theoretically speaking, then price would like slowly increase. So again, it just drives a little bit more scarce, a little bit less inflation, and fundamentally improves the asset. But halving is only a supply side of the equation. It doesn't really say anything for demand.
They can't do much to tweak on the demand side.
Yeah.
I think that's reliant on other factors, as you say. What has been the historical performance of Bitcoin? Obviously, I think this is what, our fourth halving now, our fourth halving. So, looking retrospectively, what does the data tell us happens to Bitcoin generally? Obviously, not financial advice, and past performance not indicative of the future, but what have we seen?
Yeah, thanks for the caveats. Yeah, I mean, we're still working with a small sample size because, as you mentioned, we're only on the fourth halving. But yeah, like market commentators talk a lot about cycles with Bitcoin, and specifically around the halving cycles. And historically, halving cycles have been strong indicators for financial performance. I think it's like the 365 days either side of the halving have been like best performers. But so from the 2012 halving, Bitcoin price went up like 100x over the following 13 months. Wow. But the Bitcoin price at the time of the halving was like $12 US, which is a fair bit less than it is now. And then from the 2016 halving, price went up like 30x over 17 months, I think. And then 2016 halving, it went up 7.5x over the following 19 months. So historically, over the previous 3 cycles, we have seen significant increases in Bitcoin price in the 12 to 18 months post-halving. Yeah.
And that's certainly, before we even got into this post-ETF environment, or as we're still wading through that ETF environment itself for this halving. So what are the factors then that are at play for Bitcoin post-2024? Yeah,
I mean, it's interesting. So yeah, if we go back through those price bumps each halving, so that's obviously the narrative so we spoke about the fundamentals behind the halving, the changes in supply and issuance. But one of the other effects of the halving is narrative driven, really. So like the mainstream media and like general public has sort of been conditioned to view the halving as this major event in Bitcoin's life cycle, and the price changes we've seen post-halving are perhaps indicative of that. So the halving itself only solves this supply side. For the demand side, maybe we can, rely on the media and maybe Larry Fink getting on TV and giving us all a bit of help with that. But as we've seen from those price bumps, that it has been a significant driver of price performance. But just to recap those numbers I mentioned, so we saw 100x with the first halving, then 30x and 7.5x. So the rate of price increase is diminishing with each halving cycle, and that makes sense. As the market, Bitcoin has been growing a market cap, it becomes more liquid, so it requires more dollars of investment to increase price. And to add to that, the rate of halving diminishes with each cycle. So for the first halving, we cut block rewards from 50 BTC per block down to 25 BTC, so it cut at 25. But then we went from 25 to 12, so we cut by 12.5 BTC per block. And now we're going to go from 6.25 down to 3.125. So it's a lot smaller of a cut than it was in previous cycles, so the narrative gets weaker and weaker each cycle. So in terms of 24 and beyond, I mean, impossible to say. I mean, we saw 7.5x post last halving. I think lots of people would bite your hand off at a 2x, 2.5x from here on out. As well, like up until the last couple of years, Bitcoin has kind of existed only in a zero interest rate pretty much environment. So the economic conditions have been pretty favorable throughout the life of Bitcoin. But like S&P has been at all-time highs recently. There's also geopolitical factors that I won't get into, but one of the macro factors in crypto specifically is the ETFs. We've seen the Bitcoin ETF get approved in the US, which saw a significant amount of demand from January to date. And now Hong Kong is coming into the party as well. So those two narratives could be strung together with the supply side of the halving and maybe some demand from the ETF. There are some stats that the weekly buys from the ETFs were outpacing the supply issuance from the halving.
Wow.
So that was like purely economics, that demand was outpacing supply. Also, like Bitcoin held on exchanges like BTC Markets is at an all-time low. It's been continuously going down since 2021. So there's less Bitcoin available to be bought. So couple that in with the halving, there's interesting dynamics at play that could drive price a bit further.
And do we have any insight into those withdrawals off exchange? Like, what's driving that behavior? Has there been any kind of macro thematics emerge around that?
Yeah, I mean, I guess one of the things that Bitcoin, sort of different to a lot of other cryptocurrencies, is it has no real NFT, DeFi ecosystem or anything like that, but there is one starting to emerge. There's like ordinals, which is like an NFT standard on Bitcoin, and there's Bitcoin layer 2s, and there's this new Rune token standard going live the day of the halving, which is giving people utility for their Bitcoin, which hasn't existed in the past. So that can also add fuel to the fire of narratives for Bitcoin, and that also creates a new revenue source for miners, because with the halving, with block rewards getting cut in half post-halving, then it impacts the profitability formula for miners a bit. But recently we saw transaction fees. So miners make their money through block rewards and transaction fees. Transaction fees have hit new highs recently due to like ordinals and the new Bitcoin ecosystems popping up. So like all things in crypto, a few of those little narratives popping up can just start to ripple into people's buying decisions and maybe impact price. Yeah.
And I think probably that would be a discussion for a later session, is around how narrative driven and the different narratives that are at play in the cryptocurrency industry, if I can get the words out. On that note, thank you so much, Charlie, for coming in to join us. Yes, absolutely. And to everybody else, thank you so much for coming along as we have a chat today with Charlie Sherry all about the Bitcoin halving and what it means more broadly. So thank you very much.
You're watching Ticker. We'll have more in just a few minutes.